CNBC TV18, embarking on a quarter century of excellence.
You're with us here on the final hour, closing bell. We're coming to you live from the CNBC-TV18 Motilal studios. I'm Prashant. With me, my colleagues Rima and Surubi, and I have to say that this could be this could have been yesterday or the day before, because every day we start 2:30 with at least 100 points on the Nifty.
And we also end with a 100-point gain. So.
And plus, to make it a little different, for what it's worth, we got a fresh all-time high today. Then we kind of cooled off from there. But 100 points, including taking out the all-time high, at least intraday.
Both the Nifty and the Bank Nifty are at new highs. If you want to nitpick, you can say that maybe the mid and small cap indices are not there yet. But would you read that as some intermarket divergence which should get you worried or anything? I don't think so. The fact is the mid and the small cap indices did a lot better as compared to large caps, and they fell a little bit more that last Wednesday, 4 days back. So they're not there yet at their respective highs. Just two levels in terms of supports. So, the 78.6% retracement or the fall was for the Nifty and the Bank Nifty now become support levels. So for the Nifty, the number will come up on your screen. 21,461 is that number. And for the Bank Nifty, the corresponding numbers will come up on your screen, 47,900. Public sector banks are doing very well today. The PSE index is in the red, but as I said in the morning as well, the sector is doing well. It's just that, in that space, there is rotation. Sometimes something does better, and other times something else does better. Yesterday was all defense. Defense is still, stuff like Bharat Dynamics, etc. is doing well, but overwhelmingly today, it's a PSU bank day, but the public sector element is very much there, top of the list in terms of what we're seeing with gainers. 21,560 is where the Nifty is trading right now. Rima.
Well, I'm watching for the India VIX. That's typically known as the fear gauge index. It drops, it plummets when, the possibility of a correction is quite distant. And today you are seeing VIX climb. In fact, VIX has been climbing. Today it's up 5%. This month, in the month of December, it's seen a rally of close to about 20%. It's nowhere close to its 52-week high. The 52-week high on the India VIX was a level above 19 sometime in January, which preceded the fall that came in February. But 19 plus was the high. We're currently around 15.3, but there has been a steady rise in the India VIX. The 52-week low on India VIX is, I think, close to about 8.5 or 9, thereabout. Watch for CPSE index. We've been highlighting that as, with its record-breaking run, up 70% year-to-date. But today, the CPSE index has given way. It's down 0.7%. And if you've got to nitpick, even the advanced decline ratio is right now skewed in favor of the losing side. Some levels to watch. Those are the new all-time high levels. On the Nifty, it's 21,603.4, while on the Nifty Bank, it's 48,245. And by the way, global markets have had a pretty good session. In Asia today, you've got Hang Seng up 1.7%, Nikkei closing with a gain of more than 1%, and Europe in the early trade is holding up steady with a gain of about 0.3%.
Well, it's so far so good, and most of the Asian markets that came back from the Christmas holiday, they've managed a decent gain for themselves. Just a few more names, and the PSU party is still going strong. Some pockets of profit taking in PSUs, but even then, by the way, look at LIC now. LIC's gain is almost 4.5%. As we speak, and the other PSU stocks still holding on to their gains would include, of course, a lot of the banks. PNB, for instance, is up and about. You also have names like Bank of Baroda, 3% up over there, Union Bank. So PSU banks as a pack looking good. And so are some of the PSU metal stocks. Nalco would be an example of the same, about 2.5% up there as well. So not too bad in terms of the way the market is playing out at this point in time. Nifty losers, speaking of PSUs, NTPC has been seeing profit taking right from the morning. That hasn't changed. So that's one PSU stock, Nifty PSU stock, that has found some losses today. Well, how should you position yourself in this last hour? What are the trades to look at? We've got Mitesh joining in as usual. Mitesh, I remember earlier in the morning you were advising that, keep it a little light and perhaps book some profits, enter at lower levels. But, what would be that lower level to enter? We hit the all-time high now at 550 thereabouts. Where should one look at longs again?
So I think we're still hovering around this 21,550 mark. But the good thing is that we haven't given the gains, we have not seen any aggressive selling at the previous hourly closing high. So, while the intraday high was around 21,593, I was always looking at 21,550 as the pivot. And we are still around that, so it still looks okay to me. The key here could be Bank Nifty. I'm waiting for the Bank Nifty to get past 48,100. If that happens, I think that should add some strength on the Bank Nifty, and then we could see continuation immediately. And on the stock side, I think, also, if you look at it, I think HDFC Bank after a long time seems to be finding its mojo back. So I think I've had buy calls earlier, but even now can be bought. The stock can be bought with a stop at about 1679 for targets of 1730, 35. And the other one which I like is JSW Steel. Keep a stop below 855, look for targets of 900.
Okay, thank you very much for that. Cement is clearly the sector of the day. Ultratech Cement is the top gainer, 4% rally on that. Dalmia Bharat Cement is up 4.5%. Ramco Cement too has got an upgrade from Nomura. In fact, Nomura has upgraded the entire sector on the expectation that volume growth in the next decade will be higher than what we've seen in the last decade. Nimesh joins us for more details on that. It was a standout brokerage note for the day also. Nimesh.
The entire cement sector is buzzing in trade today on the back of a large upgrade from Nomura. Across cement names, they've upgraded a few stocks to buy from neutral, and they've raised their target prices as well. So on Ultratech, the new rating is buy from neutral, and there they've raised a target price to 11,500. They've also upgraded Ramco Cements to buy now, and there they have a target price of 1250. And on Dalmia Cement, the new target price is 2,900 versus 2,600 earlier. Even on Shri Cement, they maintain a buy rating, but there they've raised the target price now to 34,400 versus earlier target price of 27,800. Now, why Nomura is bullish on the cement sector? They believe that the upward momentum in terms of pricing and volume is likely to continue. They expect the margins to expand on back of strong volume growth, pricing discipline, as well as relatively lower fuel costs. So, the momentum in terms of volume growth is likely to continue in the second half of FY24, and by FY25-26, they expect the volume growth to be higher than the last decade's volume. In terms of pricing as well, they expect the trade prices to improve as the industry exits the pre-election phase. So on back of strong volume growth as well as pricing discipline, they've raised the EPS estimates, target prices as well across all the cement names, and few stocks have now been upgraded to buy from neutral earlier.
Nimesh, thank you very much for that. Mitesh, anything stand out in the cement space?
Prashant, I've been liking Ultratech Cement, and that's been on the recommendation list as well. That apart, I think India Cement is something, which is catching our attention recently. The stock has had a rally from 210 to about 275, and since then has cooled off into consolidation. I think once it starts getting past 270, 275 zone again, this could be a very good stock on the long-term charts, and I would look at 300 plus kind of targets. That about, I think Ultratech remains the top pick. The rest, I'm not tracking all of these stocks on the mid-cap side.
Just take a look at Gokuldas exports, Mitesh. I mean, it's come off quite a bit. I think if you look at the daily charts, there was that big gap with Gokuldas exports when they made that acquisition. Stock went from 600 levels to straight to about 750, 770. And from the highs of 1,020 or so, it's come down to 840 now. Is it going all the way down to the 650 zone, or how does it look?
So, Prashant, I think the stock appears to have completed one leg of the up move, and I think now is cooling off. I'm still not looking at targets of 650, but there are some weekly pivots. One we got a weekly closing low of 778 on the 3rd of November. And then you have some weekly averages around the 780, 790 mark. So I think the 780 level is the level to watch out for. If the stock, is able to arrest the decline over these levels, and then we see some reversal, then I think it could resume its uptrend again. But for the time, I think it's most likely heading towards the 780 zone.
Okay, let's move on then and talk about the CNBC-TV18 story about RBI giving a one-year extension to Bajaj Finance and RBL Bank's credit card partnership. And we've got some mixed views on the same. Vivek had broken the story yesterday. He joins in for a bull and bear on that. Vivek.
Well, absolutely right. Yesterday we reported about how, despite Bajaj Finance asking for a longer extension in terms of the tenure the co-branded partnership that they have with RBL Bank in terms of credit card issuances. RBI, had issued a letter, gave them a one-year extension, and had also noted about how there were some serious deficiencies in how Bajaj Finance was actually adhering to RBI norms. Today, two brokerages have reacted on this particular development. Morgan Stanley continues to remain a bull on Bajaj Finance. What they're saying is that, in their view, prima facie serious deficiencies and a one-year extension don't really tie up. However, they're saying at this point of time, they lack sufficient information to assess the impact on Bajaj Finance with any certainty, given the fact that there has been no update to the exchanges as yet. Also, what they're saying is that near-term operations should continue as usual, unlikely that this particular development will have a material impact on earnings. They also believe that Bajaj Finance still has 1 year to go ahead and adhere to all of the RBI guidelines. On the other hand, Kotak Institutional Equities has taken a more serious view of the development and the story that we broke yesterday. They are saying that, if accurate, this particular development is the third development that may probably prompt Bajaj Finance to go ahead and tweak down its high loan growth rate that they've actually embarked upon. Along with that, they're saying they're quite watchful of Bajaj's growth commentary in the coming quarter. Remember, last month, RBI had asked Bajaj Finance to stop sanction as well as disbursements of the e-com as well as the Insta EMI cards. So on the back of that, they've gone ahead and tweaked down, the loan growth that they had. They now guide for a 29% loan growth versus a 33% loan growth that they had for FY24.
All right. Thanks very much, Vivek, for that. So Bajaj Finance actually is one of the few names. I think there are only 4 or 5 names, which, the stock is lower as compared to where it was last Wednesday. The lows, it's lower than the lowest point last Wednesday. So, one of the few names there. Prashant Khemka is now joining us, founder of White Oak Capital Management. Prashant, good to have you back on the program. Thank you very much for your time. Let me just begin with, since we have you, and we'll talk about your preferences and how you're thinking about 2024. But since Vivek was talking about Bajaj Finance, and it's a well-owned, large name, are you on the bull side or the bear side, or are you sitting this one out? What are your thoughts?
See, as you know, Prashant, first of all, thank you for having me here. Unable to talk on any particular name, as you know well. Historically, the team has had very good success in investing in financial sector, particularly private financials, including banks as well as non-banking sector. And we continue to remain so. So I'll leave it at that.
Okay. But broadly, would you stick with banks, or would you be worried about unsecured and more regulation and more norms from the RBI? We've already, as Vivek was pointing out, we've had 2 or 3 of these kind of missives from the RBI asking generally to slow down the growth in unsecured loans. That seems to be the clear intent. So in the light of that, what would you do?
Certainly, Prashant. I think first and foremost, where we are today in the market, what is the prognosis for the economy, what the market is telling about corporate earnings growth, and hence the economic backdrop for the same. And given where valuations are across sectors, I do think, financials remain one of the most attractive segments of the market for stock picking. Financials have lagged this year as well. But I think at this time, the risks notwithstanding, across the market cap segment, be it large, mid, or small, financials do present several very attractive opportunities. Coming to the concerns on asset quality, yes, certain pockets, particularly the unsecured lending, several companies have highlighted as a potential segment that can, entail some risk down the line. I think the actions that RBI has undertaken over the last month or two there's a positive way to interpret it. The RBI has, while on one hand increased the risk weights, it also has preempted, potential bigger downsides on the balance sheets. And to that end, it is a positive. You get somewhat lower growth, but at a reduced risk level. So I think, it is, on balance, a good outcome over the last 2 months, what actions have been taken. And while the risk remains, for companies at least, we are very cognizant and very very much, attentive to this risk in the companies that we own, and we believe in those companies at least it is well balanced.
Prashant, hi, good afternoon. So if I could urge you to expand on that point, you're saying financials offer a good risk reward, but that's a large universe. So what would your preference be? Would you look at private sector banks that have not moved this year? PSUs have had a much better run. Or perhaps would you look at non-lenders as well? I mean, there are insurance companies, there are asset managers. And on insurance, every now and then there are lots of regulatory concerns, which kind of sometimes knock out the stocks. So what would your view be here, and what part of the financial landscape do you like the most?
Certainly. So across board, there are a lot of opportunities, Surbi. So large private sector banks, yes, is a major segment to invest in, and we are finding very good opportunities in the large private sector bank space. Also, in the NBFCs across large, mid, small, I would say there are select opportunities. There are niche. There are, first of all, broad-based NBFCs who operate across what are called multiple NBFCs, but there are also monoline NBFCs who've done extremely well in their niche segment. So we have several investments in NBFC space. And amongst non-lenders, beyond just insurance companies, there are capital market intermediaries who have built over the years a very strong position in their respective areas, and we have good exposure in these as well. So I would say PSUs, we are not that much exposed in the PSU, in particular the banking sector, but private sector banks, NBFCs, as well as capital market intermediaries would be areas where we have found some very attractive opportunities at this time.
Prashant, afternoon. Reema here. So no big exposure to PSU banks. What about PSUs in the defense segment? The current valuation is pricing in very strong order booking and execution for the next 5 or 6 years. Do you think valuations, prices have run ahead of themselves? And how would you approach the defense basket? Because it's done exceedingly well in 2023.
Certainly. Thanks, Seema, for the question. Yes, you are right. Defense basket has done very well, and our team has found some good opportunities there so far. But I do worry going forward in that segment. As you pointed out, these stocks are pricing in now a very, I don't know whether it's 5 years or 7 years or 3 years, but they are pricing in some robust execution and overall demand growth over the coming one election term or more. You're right on that. So at this point, for fresh allocations, I think one should be very, very selective in this space, which is, I would call more broadly defense, railways, power, all this deep cyclicals, domestic cyclicals. One should be very careful in terms of new money deployment. There are still stock-specific opportunities, no doubt, but the broad-based rally that lifted all boats in these sectors, I think, is behind us and potentially holds risks going forward.
So you would be wary or selective when it comes to fresh allocation, but would you recommend profit booking? Because you did say your team has entered into many of, in these segments. So would you recommend profit booking?
So I would say over the last 12 to 24 months, these did offer some attractive entry points. And at this point in time, what I see our team doing is when they find other opportunities, these are serving as source of cash. And in turn, you can say that is, some bit of profit booking in these segments.
Prashant, you guys have bought stocks in the consumer space, on the retailing side. You bought some mid-cap, small tech companies. I mean, very opportunistic, right? I mean, so in a way, it's the power of themes perhaps has been overplayed in 23. I mean, that's kind of gotten done. So it's going to be very stock specific in 24.
Certainly, Prashant, as we've discussed before, we usually go out of our way to keep our portfolios non-thematic because we think themes add more risk to the portfolio rather than potential for any consistent alpha. So in our portfolio right now, besides financials that we talked about, consumption would be a major area of investment, including retail within that. Also technology, IT services, which has had a pretty tough couple of years, though last year was very good for mid-cap IT. But if you take 2 years in combination from the end of 21, it's been a fairly rocky ride, and especially large caps have still not recovered. But overall, I think IT services represent a very attractive opportunity at this time as well, particularly in light of where the global economy is, with inflation having sobered down and interest rates peaked out, and corporate earnings looking up. So I would say financials, consumption, and IT services would be three segments of the market where the team has found most attractive opportunities in the recent past, not to take away from other sectors like healthcare, industrials, and so on, where there are always, one-off opportunities that we don't ignore.
Okay, all right, Prashant, we've run out of time, not questions, but really appreciate you joining in today. All-time highs once again on the index. We wish you season's greetings. Have a fantastic end to 23, and we look forward to chatting with you in the new year. Right now, do have to take a break. We'll come back on the other side, keep tracking the market action, and Amit Gupta of ICICI Securities PMS will join in for some perspective as well.
CNBC TV18, embarking on a quarter century of excellence. CNBC TV18, embarking on a quarter century of excellence.
Welcome back. Let's turn our attention now to the automotive space. Now, DAM Capital has come out with a report. This is after carrying out extensive channel checks on the tractor industry across India. And here is the feedback. Their feedback is for the tractor industry is a big negative surprise. They're looking at a double-digit decline for the tractor industry in the month of December. This compares with consensus expectations of a flat volume growth and a management guidance of flat to marginal growth for the month of December. In fact, DAM Capital says for the industry, we could be staring at an over 15% decline on a year-on-year basis for the month of December. For the quarter, they expect that's the tractor industry to record a single-digit year-on-year decline, and this is due to weakening agri demand and lower rabi sowing. Monsoon deficit is the key reason behind the weakened demand from equipments across the country. Now, DAM Capital prefers the two-wheeler segment over the other segments of the automotive industry. They expect a volume upgrade and margin expansion for two-wheeler players going ahead because two-wheelers are still trading at comfortable valuations relative to the auto pack. They also like the tire space considering stable demand, falling raw material costs, coupled with the valuation comfort. So one of their top picks today is Bajaj Auto with a target price of 7,200, and currently Bajaj Auto is at 6,681. So significant upside, 3.5% gain on Bajaj Auto, one of the big movers. Amit Gupta, Senior VP and Fund Manager at ICICI Securities PMS, now joins in. Amit, have you done any analysis of the recent demand environment for the tractor industry? Are we really staring at a fairly significant double-digit decline in terms of tractor volumes for the month of December? And amongst the auto pack, which is the segment which looks attractive to you relative to valuations?
See, I understand what you actually are trying to point out, that tractors which are related to the rural area. But rural area has been in distress for the last couple of years now. And we have not seen that the tractor volumes, have not picked up, right? In fact, when we have visited and met many organizations now, so we were in Punjab also, we met with Sonalika Tractors, we met with the Mahindra management also. And we have seen that it is not only that the rural area is looking for the tractors, but yes, it is linked to their business line. So yes, they can stop the discretionary expenditure or some other consumption, but not the area which is linked to their business line. And that is where the tractor business has continued to do better. In fact, not only this, we have seen that in the urban areas also, in some of the cities in Punjab, they have started using actually tractor. The corporates are using it because the cost of transportation is quite high. And while I buy a tractor, it is much, much cheaper than buying a truck. If you see, a truck starts from 35 lakh rupees and a tractor starts from 5 lakh rupees. It's a big difference. And this is where some of the corporates, they have also started using tractors. So I am not saying big, but yes, it is also linked with some of the corporate capex now. And this is where Mahindra is doing well. And this is where tractors overall numbers have been coming good. So yes, once in a while kind of dip is fine, but I don't see it is linked to that particular distress in the rural area.
Okay. Got that. Amit, let's talk about the sector of the day. It's once again PSUs. This time it's PSU banks more than the other public sector entities. What's your thought? We've been having these discussions, a lot of people in the market who are waiting for the private sector bank catch up. So where would you be comfortable allocating money? On the private sector side, or would you stay with PSU banks in the new year?
So yes, we have placed our bets on PSU banks, no doubt about this. In fact, for the last 1 year, we have not seen that kind of returns because of Adani news. Also, we saw that couple of times the stocks have come down. And then we saw that finally the bond yields have softened. If you see the US bond yields, they have also softened greatly. And that impacted our bond yields also positively. And I think this is where the treasury profits are going to be better in the banking side. And going forward, the government bonds are going to be included actually in the JP Morgan bond index from June next year. And that will bring $23 billion of flows. And then you can see further subdued yields going forward, which I think can drive the profitability in the treasury side of the banks further. And the banks like PSUs, they hold more government bonds actually in their books, and this is where they are the major beneficiary of that move. I think this is something which goes in their favor. And second, I think the corporate capex is just starting now. It is just growing by 6%. It is not growing by the average credit growth, what we are seeing of 17, 18%. And this is where when your NPAs are at 10-year lows, your credit cost is actually much in control now. You are seeing that once this cycle starts for the corporate lending, you will see that the PSU banks, which are more linked with the corporates, they will start performing better. And that is why we have kept them in our portfolio now.
Amit, so give us 3-4 picks where you think money can be made from here, in your opinion. From here, I mean, not fresh entries essentially is what I'm trying to understand.
So I think few areas, if you see from the defense side. So defense side, we had seen previously Hindustan Aeronautics, Bharat Electronics were performing. And they were performing because it is not that the order book position increased from the significantly, rather the future order book position, that visibility improved. And this is where the market cap expansion happened in HAL. The order book position of 81,000 crore, and if you see the market cap, it moved to 1,60,000 crores. Bharat Electronics also, we saw from 61,000 crore order book, the market cap moved towards 1,20,000 crores. I think from the current levels now, if you have the money can be made in the other PSUs, because obviously the defense space is more dominated by the PSUs, 80% dominated by them. So from here, I think if you see the likes of Mazgaon Dock, Bharat Dynamics or BEML, where we have not seen that market cap expansion yet, because the future order book visibility is yet to come. So wherever it is coming, you will see that move or expansion happening. So BEML we have taken in our portfolios. We have taken at a lower level of around 23,000-24,000. And we believe the current order book of 10,000 crore around, it is going to move towards 17,000 crore very fast now, because they have got orders from Patna Metro, Chennai Metro, and Mumbai Metro also. And the Bangalore Metro, 3,000 crores of orders they received before. And I think this is where the market cap from 10,000 crore currently, it will start moving up faster. So this is how the market, has changed in India now. We have to look at the opportunities even at these levels of the market, and the stocks which have not performed, and there is a very strong tailwind in the sector. I think it throws an opportunity that we need to look at.
BEML, not Mazgaon, or Mazgaon as well, because Mazgaon in exactly 2 years, I'm just looking at it, it's a 10-bagger, Mazgaon Dock, and market cap is almost 50,000 crores now. Mazgaon Dock, BEML, I take your point,
Yes.
but
We are
Mazgaon
focusing on BEML here, right?
Okay. But Mazgaon also, you said you bought around 2,300, but you're more comfortable with BEML.
Yeah, so
more
Mazgaon
conviction
Dock,
there.
if you see, so Mazgaon Dock, if you see the current order book position is around 40,000 crores, and the market cap is also placed around 40,000 crores. So there is a large possibility of, if suppose the future order book positioning looks better from here, then the market cap expansion even from these levels is possible. And BEML, I think it is likely to happen. As you asked me from the current levels, which may be the first movers, I think that those are the stocks that one can look at. This
and metals, is there anything happening, Amit? Something a name like Hindustan Copper, which we don't talk about that often. Again, where will money be made here in metals, if at all, you think?
So I think if you see from the metal perspective, because dollar is weakening, right? So when dollar weakens, we see the commodities also sometimes, starts moving up. So it is possible that you may see some commodity move also in certain segments. So metals, possibly, steel or, aluminum, they can see some surge along with copper. And this is where the commodity linked stocks can perform for some time. Dollar, actually, if you see, everything happened. If you look at the month of February 2023, there were 5 banks being collapsed in US. And that time Nifty was around 17,000, and dollar, it did not go towards 2022 highs of 115 that time. and it remained around 105. So that is something that we need to look at. That dollar is weakening. And this is where, even if we are saying that FI flows will come in, but commodities also can see some kind of a spike.
Amit, thank you very much for joining in. By the way, there is a swift up move back to the day's high. 21,622 on the Nifty, a 180-point gain. When we started the show at 2:30, the Nifty was around 21,550 with a 100-point gain. And now we've quickly built on that, and it's a 180-point rally on the Nifty. So fresh highs coming through once again on the Nifty and on the Nifty Bank. Some of the big movers include Eicher Motors, that's moved up close to 1.9%. You've got L&T inching up, M&M. In fact, a lot of the auto names and some buying emerging in IT names like TCS2 contributing on the way up. As we slip into a very short break, we listen into Atul Suri, CEO of Marathon Trends PMS, as he discusses his outlook on the way forward for the markets.
I do think that we are heading into a year which is going to see a very good upside in global markets. And what's going to change in India is that last year was all domestic, which is your domestic flows, SIP flows. Already December is showing it, but I feel that this year, the coming year, will be the largest FII flows the country has ever seen. But the important part is that if you've got sectors and themes which show leadership and you have conviction, it's best to hold on to it. The need for activity is something which is more your own limitations. Mindset is of most people is that, things have gone up. So they are like skeptical, oh, it's already gone up too much. Now, when I look at global markets, etc., what I think is that the global bull run in equities is just starting. If you start seeing, especially I think, look at the US, etc., you'll find that these markets are just now pushing towards lifetime highs. I do think that the year is going to be dominated by global markets. So when I see whether it's S&P or it's the Dow Jones Industrial or the NASDAQ, I see almost an 18 to 20% upside from here. So what I'm seeing is that not only is a bull market that I feel will happen globally and especially in the US, but what I think is that industrials will lead it.
CNBC TV18, embarking on a quarter century of excellence. CNBC TV18, embarking on a quarter century of excellence.
Welcome back. Markets looking extremely strong, super strong, 215 points higher. It is really pushing through the boundaries today. We spoke about a couple of the major nifty stocks that are taking things higher. On the mid-cap side, there's a lot of momentum as well. Check out J-Kumar Infra. Remember, we were discussing the stock yesterday. CLSA put out a buy. Their level is 720. Now, stock in the last half hour has taken off once again. There are more names, Sona, BLW, which is up and about. And then you have, of course, some of the cement names. We had Nimesh tell us about this Nomura note earlier in the morning. So apart from Ultratech, I mean, other stocks like Dalmia Bharat, etc., also having a pretty good session. So mid-caps also catching the fever and the fervor. Though relatively speaking, I mean, mid-cap index is still up 0.5%. Really, it is a big, large-cap party out there. Well, let's go across to Nimesh now to understand what the chatter and the buzz is like. Nimesh, well, even if the volumes may be thin and people may be away, I think the market is in no mood. The market's in full mood to party with the all-time highs coming in today. What have you picked up?
Oh, absolutely. Well, absolutely, Survena. It looks like it's a party out there, right? I mean, despite the thin volumes, despite lack of participation, the markets are going up. And for a change today, the leadership is with the large cap stocks. So the Nifty's and all. I mean, we saw a bit of intraday correction as well. But again, we are at day's high, largely led by the large cap names. In fact, contrary to the screen, the feedback is, well, the volumes are thin, especially in the private bank stocks. There are offer blocks been done by the larger FIs. So means they are looking to sell at higher levels of private bank stocks. That's a bit of a contra feedback. Compared to what the screen has been suggesting. Interestingly, there is going to be a small market at close, buying in select mid-cap stocks in today's trade. So I'll highlight one of them in my chatter as well. But largely, that's the kind of flow picture which is there. Well, there is very limited flows, but again, whatever flows are there are very specific to either large caps or to the mid-cap names, so to speak. In terms of sectors, clearly, cement is the sector of the day. I highlighted the Nomura report as a standard brokerage, and we've seen big reaction in the cement names. But even in the broader markets, the participation seems to be quite high, and a lot of individual names are buzzing in trade. For example, I was looking at 3M, 35,000 stock, that has rallied 13% in today's trade. So clearly, some portfolio stocks are doing good, but from a flow perspective, watch out for bank names because some bit of selling seems to be clearly visible now from larger FIs, especially in the private bank stocks.
Okay, but private banks are rallying. Axis Bank is up 1.2%. ICICI Bank too is climbing higher. Nimesh, you want to tell us on stocks?
Well, Rima, the big theme seems to be the large blocks. Even in today's trade, there were a couple of large blocks as well. I'll start with the first one, which is Swan Energy. Nearly 1% equity got changed hands. Looks like the promoter entity is a seller in today's block. So again, in Swan, the disclosures could be important. The second name was Themis. There was a large block, nearly 4.5% equity got changed hands in Themis Medicare as well. Even there, the indication is that maybe the promoter entity was a seller, so disclosure will be important there as well. And there was a small block of 1% in IQ Lighting as well. So these were the few blocks where there were large participations. The second is Tata Motors. After a long time, some bit of interest seems to be back in Tata Motors. High delivery-based buying as well from larger FIs. So expect high delivery volumes in Tata Motors in today's trade. The third stock is IEX. I spoke about some MOC buying in select mid-cap names. IEX stands out. There is a delivery-based buying in the last half an hour at a leading FI desk in IEX in today's trade. And the last one is Crompton Consumers. While the stock has not been reacting much, but for the last couple of days, there is delivery-based selling happening in Crompton Consumers from a leading FI. And so again, for the second day running, expect high delivery volumes on the sell side in Crompton Consumers.
What a move, Nimesh. Thanks very much for that. And it's exactly, by the way, started at 3 p.m. So this is very clearly, one of those big moves. Actually, both the Nifty and the Bank Nifty, more in the Bank Nifty as compared to the Nifty. So that almost a full 1% coming in after 3 p.m. As we head into, and in 10 minutes. So this is a very large kind of a day as it turns out to be. But as Nimesh is pointing out, volumes are on the lower side, and there are deals being done at low volumes. So price moves then, of course, get show up in a very exaggerated kind of a way. That is always the risk. But for now, it is kind of going with the flow in the direction which is up. So I don't think anyone can really complain. Just a quick look at the Nifty top gainers, and Hindalco, what was up is up a little bit more. Hindalco, Ultratech, Bajaj Auto, Tata Motors, Grasim, JSW Steel, there's Bharti, SBI, and a lot more. So it's a pretty broad-based kind of a move. There's only one name with a 1% cut. That is NTPC. That's it. And you've got about 4-5 names which are down 1/3 of a percent, 0.5%. So it'll be interesting to see. I can see we'll try and get the exact numbers out, by 3:30. What are the volumes today as compared to, say, an average for the last couple of months? But I can see prima facie volumes are much lower on the. I'm looking at the Nifty here compared to yesterday, compared to the day before, compared to the whole of last week. So we'll get a full picture maybe by 3:30 or so. Mitesh is with us.
People are buying the bad news also. So take a look at Wipro. Even yesterday, it opened up, there was profit booking, but the stock closed flat. And now again, Wipro, it was down 1.5%. Now it's back in the green. So there is buying emerging even when there is that perceived bad news. Bajaj Finance was weak yesterday. Today it's rebounded up 1.5% there.
On Wipro, I was thinking in the morning when we were talking about that, the fact that the company is going after one of its executives, right, who's non-compete, etc. I was thinking, is it really bad news? I mean, it shows the company is getting proactive in a way, right?
Maybe it's sending out a signal because there have been a lot of exits, so they want to deter more of the senior management.
And shows focus, right, from the senior management. I think that's been the story with Wipro. So we'll see. But 200 plus points, and if let's ask Mitesh what he would do now. Mitesh, did you see this coming? And it's like a melt up last 10-15 minutes or so. Mitesh, are you there? I think Mitesh is on mute. Sorry, we can hear you now. Go on.
In fact, I think the overall setup has been very positive and has remained so. So I think there's no need to worry about anything. I would maintain that hold on to your long positions. In fact, we have even recommended adding Bank Nifty because it's simply breaking into fresh highs on the long side. So that's one. And on the stock side, I think, it's the private banks which are clearly the one driving the Bank Nifty. So Kotak Bank is a BTST which is top at 1890. Look for targets of 1925 here. And the other one which I like is Grasim, which I would recommend taking a BTST with a stop at 2110 for targets of 2150.
Okay, got that. Thanks, Mitesh, for the calls. You were pointing out Wipro, even TCS I noticed turned around. TCS was one of the few drags in the morning, but even that stock's moved higher. So I guess banks and IT coming together, and that kind of explains what's happening on the screen as we speak. Well, it's really up in a way. More gains, Bharti, Airtel. Some of the life insurers are turning around, by the way, from yesterday's slump. You've got SBI Life on the upside of the screen as well. LIC itself is having quite a bumper session with a 4% sort of an up move. That's the market for now. Well, Tejas Network, Protean e-Governance and Alchem Laboratories are on the radar on the back of some of the fresh brokerage notes that have come in, and these are fresh initiation calls. Our colleague Sudarshan is joining in with the details. Sudarshan, run us through. What are the brokers saying on these stocks?
Yes, I have 3 companies on which coverage is initiated today. First one is MK on Tejas Network. It initiates coverage with buy rating. Target is rupees 1,050 per share. It expects company to execute orders worth at least 29,200 crore over FY 24-28. Also, it expects company to generate revenue and EBITDA above 30,000 and 6,000 crore respectively. MK sees revenue peaking in FY 25 and settling at 5x FY 24 levels. Next one is Equirus on Alchem Labs. It initiates coverage with long rating. Target is rupees 6,295 per share. It believes company is set to embark on an unprecedented margin trajectory. It expects higher margin on NLEM price hikes and greater chronic market share. Also, possible correction in PNG prices could aid gross margin. Next one is Equirus on Protean eGov. It initiates coverage with long rating. Target is rupees 1,500 per share. It says company is a play on digital India initiatives and it earns 80% of its revenue on per transaction basis across services. It has been generating free cash flows while being profitable, and it expects new business of ONDC, cloud and international expansion to drive growth ahead.
Thank you very very much for that. Just to add a little bit more on Tejas, the MK note, some of the drivers that they've spoken about. One of them is the PLI scheme. Tejas is participating in the PLI scheme. Their investment will be 750 crore. But according to MK, what they can make, their investment is 750 crore. What they can actually make is close to about 2,900 crore peak incentives. But realistically, at least double. So 1,600 crore is what MK is anticipating. So that's point number one. Two, BSNL will need to upgrade at some point from 4G to 5G, then have a 5G pan-India presence, and then the railway investments with Kavach, etc., which is again where Tejas Networks comes in. So that is another potential lever. Thirdly, this entire move away from Chinese players like Huawei and ZTE. Now, US itself has a program called RIP and Replace program, and they've budgeted $5 billion for moving away from Chinese players. So again, Tejas Networks could be a potential beneficiary. Fourth, new reference opportunities from Tata Group companies like TCS, Tata Com. And finally, even Tata's semiconductor foray could give an added boost. So these are just some of the, levers of growth, to achieve that 30,000 revenue, number, cumulative revenue over 5 years that MK is talking about.
Okay, well, the market's definitely taking note. Stocks up about 1.5%. Time to welcome in Prakash Diwan onto the show now. Prakash, good afternoon. And what a good afternoon it's turning out to be. Just when you think it's the end of the year, nothing much is going to be happening in the market knows how to surprise, right? What have you made of this move? The fact that we didn't just cross the previous all-time high, but we're showing a lot of conviction and added buying at these levels. What do you make of the big large cap rally today?
Good afternoon, Sirvi. So I think, while the US may not have the privilege of a perfect Santa rally, we're definitely making up for that. And I think it's primarily the liquidity flows. If you just kind of jog your memory to the fact that the last 1 month has seen so much of contribution come to IPOs. The total IPO mop-up was meant to be close to about 18,000 crores, against which you probably have a number which is astoundingly high at about 18 times or something. I just read some broad stats. And that tells you that there's enough liquidity waiting in the wings to be deployed if the right opportunity comes. Now, the opportunities are good old defense, PSU banks, power sector, all of that. But the feeling that you don't want to miss out on this rally, which continues to see legs, is what's getting people so excited. So, you saw last Tuesday at 19, we had a little bit of that dip, and people are trying to figure out what was the explanation behind that. And it came just in the last 1.5 hours of the market. But then the recovery is emboldening people to buy into any kind of a dip that's available. So that's exactly what happened. Yesterday, you opened soft but closed high. Today, you opened high and you close higher. So I think it's just that feeling that buy on dips seems to be working. And if it seems to be working, why do you want to fix it? So that's what's the philosophy right now. Everybody is, as Reema mentioned in the morning, there's so much of brokerage reports and initiation coverages that are coming through, which also indicates that there's depth in the market, but it tells you that everybody's running out of ideas. So you need to keep on digging deeper. So I think it's likely to continue till some accident happens, some trigger, and I don't want to be a harbinger of bad news in that sense, but it could be anything, and the market will just need an excuse to correct itself and pause from this exuberance is my sense. So for people who are patient enough to deploy, you just have to sit and watch and rejoice all these new milestones that are being created. But otherwise, I don't think there's anything of great value that's yet available in the market.
Prakash, do stay on. We've got about 9 minutes left to close out another fantastic session for our markets. We'll come back to you after this short commercial break.
CNBC-TV18, embarking on a quarter-century of excellence. CNBC TV18, embarking on a quarter century of excellence.
Okay, welcome back. Just about 6 minutes to go for close. Prakash, we're just discussing with Rima the kind of names which are doing well, right? In the broader market, they are, without passing a comment on the good or bad, but they don't figure in the top gainers and with volumes list, but they are today, and that's been true for the last few days. Lots of names. I think Nimesh was talking about 3M India, of course, that's a MNC. There is Simcom, Kamdhenu, Sharda Cropchem, sure we speak to, Polyplex, Zentech, Pen Industries, Aarti Surfactants, I think, Polymed, POCL, Uniparts. These are the top volume-led gainers. And I can, as I'm reading these out, a fair number of auto and kind of names. Any thoughts, Prakash?
So I don't think there's a common thread that seems very discernible, Prashant, from these names in terms of a theme or a sector, unlike what's doing well for the last many days. It's a very clear indication that the market's going and picking out names which haven't done well or participated in the rally, whereas the underlying business seems to be moderately decent enough, if it's not spectacular. And that's a different story for the likes of 3M India and Honeywell and all of these high-valued stocks, which always trade at high P multiples. Because the rest of the market's getting expensive, the disparity between a 3M and some other stock, which is also now trading in, seriously high double digits on P multiples, is coming down. And if you actually have to spend that kind of money, you might as well buy something which is proven over the years. So market, responds to these situations very differently. I mean, I've been getting calls from people about stocks that I haven't heard of, which probably have been languishing post their IPOs in the last couple of years. And people just want to buy because it's available at less than listing price, not the offer price. So, there's a huge difference in how people manifest FOMO. Some of this is actually getting reflected in this list that you see. One of the key indicators that I do anecdotally is, if you don't have much time, I'll leave you with that thought. The 52-week high number is a very clear indication of where the froth is or how significant the froth is. And that's kind of getting there. It's not yet there. But traditionally, every time we've seen that number go into 250, 300 names, then that's something which we need to kind of be a bit cautious about.
Okay, FOMO getting manifested. That's really what's happening. Prakash, thank you very much for joining in. It's been another wonderful session Wednesday for our markets. The sensex top 72,000 for the first time ever. The Nifty Bank at fresh record highs. And we're closing at the day's high, at the record high. Nifty at 21,675. The sensex surging nearly 800 points. The Nifty Bank moving in step. If you had to complain, you would say that the mid-cap index is not quite, showing you the same exuberance. The mid-cap index is up 0.3%. The small-cap index too, trailing the frontliners with a 0.4% gain, though the advanced decline ratio is absolutely flat, even keel over there.
I think mid-caps don't have a reason to bother. They've rallied 45%. The mid-cap index this year is up 45%. The small-cap index is up 55% this year. So Nifty is saying, hey, end of the year, let us play catch-up as well. Anyway, to talk about some of the mid-cap movers and shakers, you definitely had the gainers out there. So you've got the PSU bank names, Bank of Baroda, PNB. These are some of the names that did well. There's a Kalyan Jewelers that managed to put on about 3.5% in the last few minutes. Sona BLW up 6.5%. Gland Pharma 3%. Kansai Nerolac, of course, on the sale of their land here in Lower Parel, Worli. Stock was up and about. On the PSU side, Hudco has been a very strong mover today, about 9% up on that stock, so big one. Can't ignore that. And LIC would be the other PSU stock that's had a very strong showing, 5% up on LIC. Apart from that, Nalco from the metal space, SAIL, Nalco. In general, the metal space was looking very buoyant. PSU and non-PSU. Non-PSU, look at the big stocks like Hindalco, Tata Steel, etc. So metals, auto, and for sure banks contributing to what has been a stupendous day for the market, 21,660 thereabouts. So no problems closing at these fresh highs, Prashant.
Oh yeah, and 2 more days to go, right? So another, you just need what, 400 more? 22,000.
Anything's possible in this kind of market.
Less than
never say
400.
never.
Yeah, so just astounding, and this is and you know, a full 1% coming after 3 o'clock, right? In the last 30 minutes, that's quite something. Well, it's a wrap on this edition. A closing bell from all of us here. It's goodbye. Thank you for staying with us. With Market Forward, we'll pick up on all the action in just a bit.
CNBC-TV18, embarking on a quarter century of excellence.